Okay, so you good to go? You're chilling on your side, yeah?
Yeah.
Okay, cool. So one thing, instantly what I saw when I was kind of reading through all the responses is here, I don't know, can you see this on my screen or should I make it bigger?
Yeah, no, that's fine.
Okay. So you said most of my entries come back to break even and then go. Right? The instant kind of opinion I had on this when I read it is, I'm not gonna even bullshit you, it was who the fuck cares? Really. Like, because that's honestly how
Yeah.
you should think about it, right? It's like, if we look at an overall curve, so hopefully we can take a look at your curve in a sec, or if you want right now, you can actually send over your own drive or Google Drive, whatever, if you have one. So just go ahead and send it over. But the first thing I'd ask always, especially if I just open up a little Paint document here. Here we are. New. 33,000. Right, so if I open a Paint document here, if your curve by any means looks something like, this or whatever, right? Who cares that there are lots of break-evens that theoretically, could have done this at some point, right? Because this is all I'm hearing, is that you had moments that you keep seeing where any one of these could have occurred, but instead, sadly enough, you have to experience this, which is still a gain in equity, overall equity. Right now, of course, as we kind of look at your curve and whatnot, if we start seeing that there isn't a general uniformity of it going upwards, then I agree. We can start looking into some of the rules that you can start using that will allow for runners to flourish, right? To actually begin to make you advances on the equity curve. But the first thing that happens in my mind is if this guy's curve has any semblance of linearity to the top side, right? To the upside, which is what you're looking for as a trader, out of it, then there shouldn't be any worry over this. This shouldn't matter whatsoever, right? And to even take that to the next level, it would be to look at close to any of the markets that I've traded or do trade, right? And what actually occurs on them, right? So there's actually two things that I want to talk specifically about here, where, let's say, I had a gold trade fucking here, right? It goes maybe, then it breaks me even. Let's say I broke even here, even though I probably wouldn't have. Let's just say I did for whatever reason. Maybe I can find a better one. Maybe something like this, right? So I get into this gold trade, either it starts moving here and I move to break even, or after this huge candle here, which would have been very big during the time, I would have moved to break even, right? And then I get stopped out of break even and then price takes off and makes, a crazy, crazy delivery. Who cares, right? I know, even likely at this point, that if I open up my personal, results over the last 2-3 months, right? And you look at this, there we go. And you look at this, no part of you is going to sit there and be like, damn, he must really care about the fact that trade was missed. He must really care about the fact that he broke even and then it ran without him. This is so terrible. Instead, you look at this and say, damn, if I could replicate even a portion of these results, right, I'd be very, very happy. So already this like misunderstanding behind break-evens no longer matters. Now, the second thing that's very important with this kind of concept of like, I'm taking break-evens and then they're running is, are you looking at an overall subset of data where every trade that breaks even at some point would have made a very, very beautiful run and you actually end up missing, let's say, 10, 15, 20 or more RR? Or is it the case that you are tunnel visioning on the particular trades that happens with, right? So what I mean by that is, a lot of the time you see this and you go, fuck, I missed this, this went around without me, this one went like 5,000 RR, I'm missing all of these. But then, if you put together 100 trades, all of a sudden, the ones where you broke even the same way, and then they just simply did this, and they did that over and over and over again, would you have overall been in profit, taking into account compounding and all this stuff? Or would you actually be at break even if you took some of these trades that ended up delivering, right? Because theoretically, let's just look at my own data right now from the last 3 months, right? Theoretically, if you take a look at this, 20 were wins, 9 were losses, 23 were break-evens. Now, I can guarantee you that at least, maybe even a fourth of these break-evens went on to make a run, and a run that could have been worth 8 RR, 10 RR. But if you really think about what this is doing, if every other 20 break-evens were losses instead of break-evens, I would have put myself at break-even or in a larger loss by simply following this rule, right? Because now all of a sudden, even though there are a few outliers and I'm looking at that and I'm like, fuck, I missed this huge move, I realize that the outliers don't make up for the average. And the average consistently shows me that I would be losing money over and over and over again if I'm constantly not moving to break even and trying to allow the trade to move, right? So I'm actually getting rid, so I'm actually, instead of maintaining, let's say, a risk of X% or XRR, we'll equivocate it to RR, over, let's say, 30 trades, right? So that by the time, let's say, a good one snaps, you make money on your curve. Instead, I'm looking at taking fixed losses, some wins, fixed losses, maybe a big win. So by the time it's time to execute that trade that would have been a larger trade and make me new all-time highs, instead of executing it at this equity, I'm executing it at an equity that's a little bit less than, right? So now I'm actually making less money by having a rule that doesn't allow me to break even because I'm scared of my break evens not allowing the big deliveries to come, right? So those are the two main issues I see with it, right? So on one side, you might not even see that these break evens are saving you a lot of money because you're very tunnel visioned on curves, especially like on trades that look like this, where like it came back and then it did this and you're like, oh my God, I can't believe I missed it, right? So this is one of the main things that I think screws a lot of traders, right? And it's one of the reasons that a lot of people have a lot of problem in the beginning creating a break-even rule and then following it, right? But if you actually look at the data, or at least your data, you start seeing that it actually balances out almost perfectly, right? If anything, it saves you more money, right? Because all of these new highs, new highs, new highs, new highs, new highs, all could have started, instead of from here, or from here, or from here, based on how my curve delivered. Let's put it that way, right? So I'd rather have systems in place that don't guarantee that I'm going to be in the move, but guarantee over time that I'm going to save a lot of the downside risk. And then when it does deliver, I'm going to make a fuck ton of money, right?
Yeah. So yeah, so I'm gonna post my equity curve on the chat, on the Discord chat.
Yep. Okay.
So like my.
So this is
So
very, very short term, right? 1, 2, 3, 4,
Yeah.
5, 6, yeah, like 10, 20 trades. So very, very short term. Do you have do you maybe have a bigger one, like the Excel one, maybe with 100, even forward tested, something like that?
I do, but it's pretty broken because I think I broke it with like all of the formulas and whatnot. But this is like my live equity curve, so I don't bullshit anything.
Yeah, sure.
So
That's fine. That's fine, right? So I want to start off by saying, first of all, this curve looks perfectly fine, just with what data we have, right?
Okay.
That's very important to consider. Now, all I'm seeing here is just looking at it is relatively good wins, good subset of break evens. This looked like break even / minor losses, right? And then here's same thing, break evens and losses. Now, I'm guessing this is a break even with just spread, or what was this?
Yeah, I think it was a Euro AUD because it was like a lot of spread and everything.
Yeah. Okay. So this is what a normal loss is right here.
Yep.
So this is -1R. So your wins are at the moment around 2RR wins or so. Yeah. Okay.
Yep.
Yeah. Okay. Great. So and I'm assuming, do you have more of a trailing system, or are you just going for 1 to 2 every time?
So for my system, it's pretty much like I partial at 50%. I partial 50% at 2, so it gives me like 1R. And I exit at 4, so it gives me a total of like 3R around
okay,
that.
so you have a very fixed system at the moment. No trail, no big winners, take off, just strict. Now, so again, so actually this is a good time to talk about this. There are huge advantages to the system you're trading now, and disadvantages, of course, right? But some advantages are ones that are actually going to help you, in the short run, right? So let's say you can get 100 trades under a proper data collection, right? So one of the next things that I think you should do right after this video, right after this call, right, is jump into any like forward test, even if it's, like forward test with like kind of what you're doing now, this live, or back test through the guise of like be very honest with yourself and make a curve out of that, right? For at least 100 trades. And look at your percentage in regards to BE and win rate, right? Because the beautiful thing, so first of all, actually, let's go disadvantages. The disadvantages of your system is that even when you get it very right, you're not going to make a lot of money. That's the sad part, right? So even when you get a market like this, you're not making a lot of money. You're making your 3R, 4R, whatever it is, right? When you get a market correct like this one, you're making 3R, 4R. If you get a market correct, like, let's look at something I took, right? GBTC, right? When I'm making 20R here, that trade, if you only get in once, which might be the case, is making you 3R, 4R. So that's a huge disadvantage to your system. It's like, it sucks because if you miss the first like trade or 2 trades, you can't get another, and then you don't get paid off, right? But that's okay. Now, the positive, the huge positive of your system is that the simplicity of it allows you to build a lot of conviction and confidence very short term, because if after 100 trades, your percentages associated with the trading, so you're at 60%, 55%, 45% win rate, the second you know this, you already know, hands down, the exact trades you're taking based on your personal conviction, based on your personal rules, are profitable no matter what, because there's a fixed RR element to it. It's not, sometimes it's 1 RR, sometimes it's 20 RR. It's every time I win, I'm making 3 RR or 3.5 RR, whatever it might be. So all I need in reference is 35% win rate, and I'm a profitable trader, right? So if you can find yourself at a 35% win rate, or let's say break-even rate that is, that seeps into that win rate or reduces your loss rate, right? Because you can have a 35% win rate, or you could literally have like a 20% win rate, 40% break-even rate, and still make a fuck ton of money, right? Because theoretically, break-even should be considered as part of the wins, right? And you might distill that number a little bit because of commissions and slippage, right? Just like we saw in your curve, but that's fine. So that's a very cool thing about your system. At the moment, you're in the, let's say, beginning stages of your trading system creation, where you haven't even decided to, nor do you need to, work at like how am I going to manage like crazy runners? How can I get into crazy runners? Instead, it's likely where your mind, I'm guessing, is right now. I want to get funded. I want to start pulling somewhat consistent money over, month to month, or better to think about a quarter to quarter, because, based on your system, it's guaranteed to make money over a good subset of data. So all I need right now is proof that data is going to make me money. Now, based on the thing you sent me, it looks like that is the case right now. It looks like your system will make money over time. And the beautiful thing is, if you have a proper data collection based backend of this, and you have, let's say, even numbers like mine. Let me check. So my numbers show, so even with these numbers, you're exceptionally profitable, right? If you have numbers that look like this, or even worse, like you could have this loss rate be, this entire thing could be red, and this system will still make you money on average quarter to quarter, right? Because your win rate and the EV from your win rate, because it's fixed, is already creating positive return overall because of just how math works. And that's a very powerful thing. So something that's really cool about your system right now is all you need to do is look at, let's say, a subset of 100, back tested / forward tested, which is what you're kind of doing right now, and see that number for itself. And if that number is over, let's say, let's call it 36% break even plus win rate percent. So as long as your loss rate is under, I'm guessing 60%, you actually have a very, very powerful system. And that's a great thing, because you have very simple things that you theoretically have to do now to see firsthand that it's profitable, right? And that should already show you at the same time how little you should start caring about, how little you should start caring about this thing, right? Because if most of them come back to break even, but that's making up for a lower loss rate, then you are directly making money as a result of that, because your numbers are static. Your returns are static. Your returns are exactly in line with what the general win rate plus BE rate is, minus that loss rate. And the lower your loss rate, the more money you're going to make no matter what, quarter to quarter, month after month, because it's proven, right? So this should instantly, that me saying that should eliminate this idea here.
It's pretty dumb.
Right? This is a great thing that your trades come back to break even, because again, based on just the curve I see now, right? It's a difference of, where is it? It's a difference of this happening here versus this high being here instead. That's all that's happening, right? Because if 2 of these were losses, you're down here now. If 1 of these within these 4 were a win, you might have your curve come up here. Sorry, right here. Yep. Then 2 losses puts you back, if you take 2 of these, back at break even. So either way, you're saving money on the downside in the scenario that this could have gone lower, but instead it gets to maintain, right? This could have easily, any of these could have taken you higher, but any of these could have also taken you way lower than this point here, right? So the fact that then this became a win and then a loss, instead of you now being here, you'd probably be back at break even with a system that looked at trying to maximize your winners running to your fixed RR, right? But instead, we should change our understanding of the formula, which is the formula makes you more money the lower the loss rate becomes. And the only way the loss rate is reduced is either your win rate increases or your break even increases. So now, even if a lot of our entries are breaking even, that should go directly into the fact that, hey, on a fixed basis, because that's all your system is right now, a fixed RR basis, you're making a fuck ton of money, right?
Yeah.
Okay, so that's a really good thing. So keep doing it. Okay, do not get in your own way, and at the same time, get those 100 trades after this. Either this week, at some point, whenever you can, get those 100 trades, even if they're fully backtested, I don't give a shit. Get them in there, get a data that you can look at, even print out the data once you have it, and stick it on your wall and go, that's what makes me money, right? Nothing else makes me money except that right there, that number. So the next time I take that break even that then runs and I'm like, oh, fuck, I missed it. Remember those few things we spoke about where you're maintaining an edge that's going to grow over time, right? And then if you think about this, just look at this and say, okay, what's this going to look like in 3 months, right? Because this has been 10 days. This is exceptional in 10. You've made 3%, 3.5% in 10 days. That's fucking wild. That's really good. Think like, don't look at this and be like, fuck, any of these could have been big runners. Even 2 of them might have been big runners. Think, what is this going to look like in 3 months from now? Because that's a quarter of a year. And is that worthy to continue pursuing, right? And then also, you can do the simple game that I've done with people before, and it's, replace this 104K or replace the 100K with 1 mil. Would you be okay with this exact same system if instead of 4.5K profit that you had right now withdrawable, instead it was 40K? Would that completely change your entire opinion over your system? Would you now be happy to take these break evens instead of potential losses, knowing that you're saving, I'm assuming, 4K a trade on a $1 million account, right? The entirety of the appeal changes. You go, hey, in the last 20 days, based on this fixed system, I've pulled out 45K from the market, right? Are you that upset anymore? The likely answer is no. You're not sitting there thinking, damn, that could have been 150K. You're thinking, I'm fucking happy with my 45K. But the problem right now might be that it might be a too low of a number at the moment to make you feel that way. So you feel like trying to maximize the winning side, which is what it seems like that might be happening, right? Rather than maximizing the edge. And all I'm telling you to do is focus on that number and maximize that edge instead, because it's already proving to make money, right? And you can just start pulling from the market, right? Imagine this is 200K. You're up 8K now in 20 days. Imagine it's 400K. You're up 16K. You're up literally a bigger salary than most households make in a year. Households, multiple people, right? So it's a very important thing just to remember, because again, this number will scale. You just need to let it scale, okay? Let's go to the next thing. So that's break evens. Let's get rid of that worry. It's no longer a worry for you, okay? It's out of the head. We're never considering it again. Keep taking your fucking break evens, okay? And then over time, you will see a lot of markets that break even and then go, but also you'll see a lot of markets that go beyond your point of take profit. And you can start taking note of that, because in the future, you will get better, and then you will create systems or rules that will allow you to stick in. But it's not important right now, because right now you have something that's profitable. So all we should care about is executing that edge, right? So let's just do that for now. Okay. Most of my losing trades are too late. So losing trades are late, but still valid as per the EMAs and models. Okay. So this is where we need to remember the point of context, right? There's 3 things that decide a trade. 3 things, right? It's the EMAs, the models, the structure, and that all makes up the idea of context, right? But we have to recognize that within context, there are other principles that might not be directly spoken about. So even though, let's say, a model could be very good, or an EMA is good, there's a portion of structure that is likely not good, right? So this could be a thing that you start to take note of within your rules, where structurally, as a move goes, so let's look at gold right here, actually. This is a perfect time to talk about this. You can see my screen, right?
Yep.
Okay, cool. So like structurally, if we think about this move, okay. So structurally, okay, right here, structurally, everything is the same. Actually, no. Model-wise, everything here is the same as everything here. Can we agree with that? Right, there's probably bullish models, it's an accumulation, it's an reaccumulation. MA-wise, are the MAs moving in the exact same way as they were here? Yes, right, there's no difference. So these 2 moments are the same in time, but they're not. So what are the underlying differences? Well, one is the structure. So this is where structurally, just on a basis of higher high, higher low, institutional structure, this is the same, right? Right? It's a impulse, impulse, right? So same thing. So there's still no difference. But if we take the structure to the next point where we say, how are we looking within a leg of structure? So, maybe you had, this initial large leg, larger correction, start of a leg, but doesn't go big time. So then we could consider this point as another large leg. So if we kind of thought about it in a different color, right? These are, let's call them large legs, right? Now the question becomes, is this circle here the same as this circle here? And the answer becomes no now, right? Because structurally, we are in very different points of, let's say, the stages, right? So if you really consider even from either structure or stages, right? You went through this huge stage 2, made up of multiple stage 1s and 2s, went into a deep stage 1, that then started a new deep stage 2. And within that, right, you had the 1, 2, 1, 2, 1. The entry here was taken off the stage 1 to go to stage 2, etc., 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 right? And here, again, we're in 1. We start the 2, and now we're in 1. So the question now is this point here, based on the stages and what happened before, the same as this stage here? And it's not, right? On a fractal, the stage 1 and 2 are the same because they're just minor. But on a large note of huge stage 1 into long stage 2, it is not. Because the only way this would be similar is if gold up here went on for a stage 1 about this long, which would be the same as this here. So this is one way, I'm just giving you an idea here, to begin to figure out, hey, am I extended in a trend, right? And do I want to consider it even though the MAs line up, the models line up, everything lines up? This is one way to do it. You look at the structural aspects, institutionally, is it the same as when as your other profitable trades? And then you look at the stages, because that's part of structure as well. Are the stage aspects the same or are they different? Now, in some cases, so this is where it's a little bit interesting. If your system is proven to be profitable, again, this is why you need to do this 100 trades thing. Whether you trade kind of a later stage or early stage, you shouldn't worry about this too much. But if you notice that sometimes this thing right here becomes a real issue, that's something to now consider. Don't just think in EMA models, because those are always going to line up for good trades, and that's good that you can spot them now. But start thinking in, what is the story of that market? What are the institutional structures telling me, right? How do they look comparatively to other institutional structures? How is the stage 1 and 2 look of this? So let's see if we can find like a real example for you right now. Let's look at stuff that I've been trading. So like NQ, maybe, because I've been trading that a lot. Okay, this thing is fucking terrible. Okay, actually, it's not terrible. Okay, so for instance, right, this has now had a deeper and longer term stage 1. And it's now being made up of new stage 1s into stage 2s, stage 1s into stage 2s, stage 1s into stage 2s. So that initial gold long that we just looked at that I said was really good, not the one up there, not the one that was up in the highs, but the one that we started looking at here, is similar to this one. If prices start coming up, this is that same gold trade, right? Can you see that kind of? Because again, now it's part of a new potential institutional leg. Now imagine price started going, and then I looked for this kind of trade right here on that stage 1 into a 2. That, even though it might have the same model, the same MA, the same model, the same MA, has a very different story in regards to what has the money already done. How has the stage 1 and 2 already played out? How has the institutional structure played out? Right? Because now this is no longer the same as this. Because this one is coming from the principle of longer term stage 1 and longer term buildup of new institutional structure. This one here will be coming from short term institutional structure, short term stage 1. So what you might do is you might skip these opportunities and wait for price to either just keep going and miss the move, or longer term stage 1 and then become interested here, because now this is going to be similar to that. So you see how you, I'm just doing this on live price to show you how I'd be considering this market, because, I'm getting long on this thing right now. I've been trying to, right? And it's partly due to the fact that, hey, it's setting up this longer term stage 1 on my given time frame, right? The institutional structure has given a principle, or has given me a reason to potentially expect a bigger explosion, okay? So does that give you a little bit of ideas maybe, or maybe, kind of shine a light bulb onto why some trades might feel like they're just not doing anything when they're still the same, versus, you know, trades that aren't the same, even though, you know, you have to use a little bit different concepts to understand that they're actually different, right? Because no trade is the same, right? They have their own principles of like where they're coming from. Sometimes it could be something as stupid or as easy as the trade here was better because it was just coming over the 200 EMA, and here it's worse because it's too far above. It could be as simple as that, right? So like if we look at even a much lower time frame, let's just do it on all time frames to do examples. Okay, we'll do like 1 minute. Okay, so like if you consider I'm in this trade like somewhere here. Okay, if we consider this trade, what do you notice about it as I take it, right? Oh, great, the EMAs look good, the models look good, that's fine. But look what's happening, right? It's in a longer term stage 1, and that's what I'm buying it through. Or another tactic is it just touched / is coming over the 200 EMA. Now, what would be an example of also good model, good EMA, but those rules are not met? It would be something like this, right? A trade that might be here, right? Same EMAs, same bullish models, but has already been surfing above the 200 for a very long time, and institutionally has already started its move from somewhere in here. So now we would need to wait for action like this that goes sideways, and then we might get a trade here. And that trade is more in line with this example than this trade here ever will be. Even though they contain the same aspects of context and EMA, right? Because again, remember, context is not made up of just EMA and model. It's made up of EMA, model, and structure. And structure has a few important elements within it, right? And those elements are institutional across timeframes. So like, what are we looking like there? And within that, you also have stages, right? What are the stage 1s and stage 2s? Because those kind of make up the structure as well, right? They're just ways to look at price. So yeah, that's like the example kind of in front of you, right? Like there's, even though this is the same as this, right? Even if you want to consider these the same thing, right? What happened here? After it took off, it then made the MB, right? What happened here? After it took off, it never made the MB, right? So like those are elements of consideration where like, you know, this is somewhere I'd look to trade. This is somewhere I would never consider to trade. And even here, right, I stay out because the thing that I'm looking for did not happen, right?
Yeah, so when I wrote that post, it was more like I wanted to create like mechanical rules behind overextension and whatnot, and like if you go on GER40, I don't know if it's spelled like that.
DAX, GER30, something, GER40 or GER30?
Yeah, 40, yeah. So I think it's the same, but yeah. So yesterday I took I don't know if I do a screen share, I don't think you'll see it, right?
No, you can do screen share. I'll see it.
All right.
But here, before you do, you can see my screen, right?
Yeah, I do.
Okay, so like already just looking at this, right, just based on the few principles that we just discussed, right, theoretically, your best entries, right, if we think about like longer term stage 1 or whatever, are going to be somewhere in here, here, and maybe here.
Yeah.
At that point, if you're now getting involved with the same rules here and here, these are already, in a sense, too late, right? So that's a good way to start thinking about that, because this could have easily just rolled over, and you take like a lot of losses there. But these were the ones that are directly coming out of those stage 1, stage 2s, stage 1, stage 2s, stage 1, stage 2s. Then this is kind of late already, but stage 1, stage 2, and this one ends up maybe breaking even and then makes a run, but whatever. Like, we have to understand that these were two very different contexts here, right? Even though they have the same EMAs and the same models. But nonetheless, okay. Let me go over to your screen. So I'll have you open right here now. All right, go ahead. Walk me through.
So yesterday, yeah, it was Thursday.
Oh yeah, look, so
yeah,
you traded
Tuesday.
in a beautiful area. Like, I love that. That looks great.
So yeah, this was my entry that I took.
Mm-hmm.
So I banked a +1 because
Very
of
good.
like the and this one I missed it, but I would have taken it regarding my rules and whatnot. I just wasn't on the screen and I didn't see it.
Yep, that one looks solid as well. Yep, looks very good.
I skipped all of this price action.
That's okay.
I
No
woke
problem
up,
with that.
Yeah, I woke up today at like 4:30 and whatnot.
Mm-hmm.
I wanted to take a trade like underneath here, or just taking all of the MB.
Yep.
But I didn't took it because in my mind this was way too overextended regarding uh like the 200 MA and
And that's fine. Yeah, I think that's a
stage
very
2,
solid
stage
rule.
1.
Yeah, dude. This is a super solid rule. There's
So
nothing wrong with that.
even though like this trade ran a lot,
Yep.
it's not valid in a sense, like it's way too overextended as per like all of the stage 2s and stage 1s.
Mm-hmm. Yeah, you're not. I don't disagree, right? So like this is where a lot of personal rules going to come in, right? So some people that have a simple rule where my validation or my context time frame. So in this case, let's say that 1 hour, right? Anytime that it's coming back to and surfing one of those EMAs, I'm happy to look for a trade. So that kind of person would be looking for a trade here, right? But that also means that over time, there are moments where they'll be looking for a trade and it chops them out a lot because of that overextension, right? These are just things you have to kind of be used to. Like it's okay to miss moves like that, right? So let's go to the 1 hour
Yeah.
really quick. Let's go to the 1 hour again, right? And let's look at where that was, right? So I mean, it's really up to you here, right? Because this is also a longer term stage 1, right? If you really want to think about it that way, than any of the ones that have happened prior, right? So like this was a big stage 1, yeah, exactly, and that's what you traded out of as it started going higher. But
Yep.
now, right up there where your entry is, right? It's of course a fractal stage 1, but that's fractal stage 1 is larger than any other stage 1. So I'm not going to say and sit here and be like, oh, you should have traded that, because that's not the case at all. I'm not going to be a bullshit like mentor where I'm like, well, you should have traded that. You would have made so much money, because it's not about that, right? The thing you have to consider here is what were those rules, right? And then you followed them, and that's great. Because for you maybe it just wasn't enough, right? Because like, okay, look at the 18th, right? So on the 18th, that's a moment where a lot of people might have, or like right before it, would have followed it, but you might have considered it a little bit too extended until it went through that deep, longer stage 1, and then you might have traded it around the 20th, right around there, yeah, as it started
Yep.
breaking out, and that's fine. And then you would have followed it, probably up until the whatever that date right there. Yeah, exactly. You'd probably follow it till there, and there's nothing wrong with that. And then guess what? It did make another move, but again, it could have just as easily went into the same kind of 18th price action, and you would have taken a few more chop losses, right? This is where it becomes very particular to the person, right? Similarly, on the 26th, that entire long-term chop, that might be enough chop for you on the 26th. Yeah, that might be enough for you to now start trading again, right? Because now it's done a deeper stage 1. Now take that same box, copy paste it to the most recent action, where you stop trading. Go no. Keep it the same size. Copy it, and now go over there. Control V. Now compare. Where is it? Oh, right below. Yeah. Now put it on top of that area. Notice how it didn't even get to half. Right? It's not even a half as long, right? So no shit, you didn't consider it. But now if it kept going sideways, then it would be a reason for you to start watching for a trade, right? You see how, it's okay to have those rules that keep you out of trades and then the trades go. That's going to happen, but it's also going to save you a lot of money. It's just right now, we're tunnel visioned in on the parts that we're missing rather than the parts that we're saving a fuck ton, right? So there's nothing wrong with what you did there. I think it's perfectly fine. And guess what? You made money on this move.
So on the long run, having rules that keep me like out of these trades, of these conditions, will make me more money.
Theoretically, yes, right? So this is where it gets interesting because, each trader, each person, blah, blah, blah is different. No shit. So some people will actually make more money by trading these times than not trading them, right? Because those are going to be their rules. But if you've seen, of course, from your rules that every time you've tried to trade in a deeper stage 2 without a proper fractal stage 1, because that's what this example is. The example that we just did with the drawing of the box is simply showing us that we don't have a long enough stage 1 for us to consider taking new trades. Instead, we're going to stay out, right? So for you, it's actually going to likely make more money, unless the data has shown something else, right? That's really it.
Yeah.
Like, we don't have to complicate it. Like, yeah, it's true that you miss trades there, but you also might have saved a fuck ton of money. We don't know which one it's going to be, right? That's where the data kind of speaks words. But also what I see from this is you made money on this move, right? You got the move, right? You played it when you could. You kept playing it where and when you could. And then when it was extended in your mind from a stage 1, stage 2, that was your time to pull out. Now, there could be other analysis tools you start using. So maybe like on a daily chart, I don't know where you started this analysis, but on a daily chart, you might look at this and say, hey, we still got space. So like, let's see where, we had a 1, like, yeah, this maybe on a daily, when you look at this, right, it had that longer term stage 1 and it started at stage 2, and maybe you can see this going to like 19,050, right? So like try draw your best stage 2 here. Like, you don't have to be perfect, but like, no, I would draw it from like an inside. So like draw the stage 1 first. So I'd probably draw it from like like that, like draw it across. You don't even have to be perfect, right? And then from like the middle of it, draw a stage 2, because that's usually how it works, right? So there you go, right? And maybe even a little smaller, just to be very conservative, right? So this could maybe make a bigger move, and this could be your reason to keep following that hourly, right?
Yeah.
This could be your reason. And if it wasn't, there's nothing wrong with that. You didn't do anything wrong, because remember, in trading, there is no right or wrong. There is just, does this make me money? Right? So when you miss moves like this and then I trade them, or someone else trades them and makes money on it, there's nothing that you should feel other than, I'm happy I followed the rules that I followed, right? Because in trading, it's very, very personalized in regards to what you're going to do as a trader, right? If this was your analysis right here, and this is what you came to me with, and then you traded that area on that hourly, so go to the hourly now. Let's say you did trade that area on the hourly, but then you took a loss, right? Because let's say it didn't keep going, I would say that's perfectly fine as well, because you followed it up until what made sense for you for a stage 2 or a stage 1 to play out, right? Because again, the daily's playing out perfectly here, and you have an expectation that this could reach into the maybe 18,850, 18,9. So theoretically, off of a shorter, hourly stage 1 like that, you might consider continuing the trade because you're a 5-minute trader. And you might take it, right? And I think that's perfectly valid too. If anything, I'm more in line with the daily outlook here of like that stage 2, which is what we've also spoken about recently in the webinars too, right? Where it's like we spoke a lot about this German move, and even I, was telling people like, like look at this, right? This is a perfect stage 2, right? So like when I look at this, I see stage 1, and I'm looking at this as stage 2. So like this is just coming to the cusp of where you see my screen, right?
Yep.
This is just to the cusp of where I'd want to see that stage 2 extend to. But that means that if I'm trading like a lower time frame, of course, like this is going to now be made up of new 1s, 2s, 1s, 2s. Small 1, I probably wouldn't trade here. 2, longer 1, I'd probably trade here. Longer 1, I'd probably trade here, right? But now there's nothing to trade. So like I probably would have traded that move, right? But that's because of this expectation, right? And don't forget the best part of this all, and I saw that within your sign up, you included that you've been looking at it, right? This has been telling us, right, very, very kind of clearly where it wants to head, how it wants to head there, and then the chart confirmed it, right? So with this in mind, if you gave me this kind of analysis, then I agree. But if you gave me this analysis like that, I would say, yeah, maybe your stage 2 is a little bit small. But if that was your analysis, then it makes sense why you didn't trade here, right? Because then your stage 2 is ended. There's nothing wrong with that. You can miss these moves. You can miss 1 million more of these moves in your lifetime and make millions, hundreds of millions of dollars, right? So you shouldn't even think about that. Like it's just it's like a who cares. Same thing goes for break evens, right? Like who cares about the break evens that make me money? Who cares about the move that I missed? I already made money, right? Or I had the opportunity to make money, and you did. You made money up in the side of these 1s and 2s, 1s and 2s, 1s and 2s, and you followed them up, and then you stopped here, because in your mind you're like, okay, institutionally we're extended. I want to see a deeper correction. That's what you waited for. It didn't happen. It went great. Now you might wait for an even deeper correction. It doesn't happen? Great, wait, right? Because again, what's a disadvantage of your trade? The money that you catch here, the trade you catch here, you're not gonna keep making money on it even if it comes here. That's one of the disadvantages of your system. But that's okay. As long as you're aware of that disadvantage, you need to be aware that moves will happen without you. But similarly, an advantage is that if the proof is there in the statistics, you're gonna make money even if it's, let's say, not a lot or whatever, right? So that's it. That's all you have to do. There's no reason to beat yourself up over the fact that this now might make a big move, because you're not here for those big moves. You don't care about the big moves. All you personally care about is, I got in when I thought I could get in. I took my money. That's it, right?
Yeah.
Good. Okay, perfect. Let's move on. Okay. So losing trades are too late. Who gives a shit? As per EMAs and models, we use more than just EMAs and models, right? So we kind of understood that, right? We're good there? And now, what do we got here? Understanding which ICI is best, okay? With the EMAs, top to bottom range. So I think we're kind of covering that right now. I think we just covered that in a very good way. Fractal MB validation. Since sometimes the setup is valid, gets wicked out, then another clean setup happens right after. Take it, then goes, or a loss. Okay, yeah. So I think we actually covered this with our most recent discussion about, like, ask yourself where you are in the move, consider it, and then be okay with missing / being in it. This idea of a setup gets invalidated and then ends up running, again, it just comes down to data. When that happens and you take an entry, are you taking more wins that way? Or is every subsequent 2 entries in an area leading to overall losses, right? I'm assuming that overall you probably make more money just by, taking the next one. But I wouldn't get attached to it, right? It doesn't really matter. Cause yeah. Yeah, like sometimes it's just gonna happen where you take something, it fucks off, and then it makes a good setup after, and it is what it is. So like all the way up here, you traded it I think somewhere in here. This one?
Tuesday, I think.
Monday.
Tuesday at
I'm looking at Monday. But again, there was like good trades here, right? So if you took this and then you got stopped out, break even, and then you took this, and maybe you got stopped out, break even again, and you took this, and then it made a run, then great, right? Who cares? This was great, right? If you did something like that, and then on this day, there was this. I think that's what you took, Tuesday, 4 a.m.
Yeah.
Maybe no. I think you even took this one.
I think the first one I took it, and the second I just.
Oh yeah, this one you didn't take. Yeah. But again, like that's a great trade. There's nothing wrong with that, right? Like, and again, like this is a great example of this is the disadvantage of trading a system like yours, but the advantage is that you're guaranteeing a certain return and almost a guaranteed return because you've done the work that you've done so far, right? And that's fine. So we don't even consider this. We don't think about it. We don't care that it's up here and maybe it's extended, maybe it's not extended. It doesn't matter. All we care about is that our rules were met. So we started following them into this price action, right? And then we made our money and we left, right? You might have even considered this. I don't even know if you did, but like, maybe you did, and then you made some more money, or it was extended, probably extended, right? But like, yeah, I don't think there's anything wrong with that, right? And then, a lot of these, as I'm looking at them, they don't give another ICI or like an example. We can't find much examples that lost and then made a good setup. So maybe that leads you to make the decision that if something loses, you don't really care if it makes another setup after because you're not going to trade it anyway, right? Unless you start doing the proper data collection, you're like, listen, if I traded this area here, shit, I don't even see it, right? Like, look, if nothing here is showing that if there's a loss, then there's a win. Everything's showing if there's a win, it's a win, right? Maybe here, like, look, it would have been a win, right? Maybe, or break even. Okay, so we wait, then maybe this one, okay? Okay, maybe a win or break even, or if it loses for any reason, imagine trying to take a new setup. Nothing would have worked, right? So like, if your data is showing that every time you get a trade, it either makes the move or it fails and makes another trade but then never goes, why would we trade them, right? Because our system's proving that the best moves come from one setup, right? One setup, and it moves. One setup, maybe something in here on a lower time frame, and it moves. One setup, maybe something here on a lower time frame or here, and it moves, right? Everything moves once there's a setup. Here, right? Makes a setup, fails, prints new ranges, new setup. So now this is a new setup in regards to this one, right? You understand that, right? Because like this is very different context to this, right? New ranges, built up new model, boom, execution, or like execution. So again, when it works, it works. When it works, it works. When it fails, don't try again because then it ends up usually failing, right? Even right here, if we look at this, here's a good example, right? It fails, builds a new range. Maybe you try this one, it fails. So you stop taking trades because we're still in that same range. And then when this one happens, guess what? It fails. So then you would have prevented this loss, right? You would have taken loss, loss, win, win, or however you want to consider it, right? Or like win, 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 loss, loss, win, win, or like win, win, loss, loss, win, break even, win, win, and like I don't know if you traded this, I don't think you did because it was extended, right? But again, like if you traded this, then great, right? If it's a win, it's a winner. That's it. If this instantly lost, then we know that if it's set up right here, we shouldn't take it. Right, because there's proof on behalf of what we've done before and based on our own analysis that when there's a winner, the winner will deliver if it wants to. Otherwise, the price is too choppy now, right? So instead of taking this trade, you'll wait then, and maybe a longer term blah, blah, blah happens, just like this, and then takes off and gives you a new setup here. And again, once you take it, it either makes it a winner or it breaks even, in which case you can take another because you've seen break evens that then end up delivering, right? Break evens that then end up delivering. But if it loses, you're not taking this trade here, no matter what, because you know When something starts to fail, it's proving to you that it's choppy and doesn't want to go, right? Just based on the mini test that we're doing now together right now, right here, right? Just based on this data right here. Now, it's not enough data, of course, but I'm just showing you kind of the thought process you want to apply to this, right?
Yeah, so I don't have like an example right now of what I wrote, but I think you actually you covered it like in the last point and in this point. So yeah, most of your entries like they don't come back to break even if they're great. So even if it wicks you out and everything, it just
Yep, I'm fine with it, right? And that happens.
Yeah.
Like, I had that happen this week. Look, it happened this week on NQ. Here. Goes, I break even, it wicks me out, and then it ends up actually delivering. That usually doesn't happen, right? But if I change my rules to let this happen, I'm probably going to lose more money.
yeah.
So I allow it to happen. And then I get another entry, and guess what? No wick out, right? It goes. I get an entry. If it wants to go, it will go. And then if it doesn't, right, it's just look what it does after it fails. Look at this. It's like as if I predicted the market's going to go to shit if it fails.
Yeah.
Isn't that interesting, right? It seems that when I'm taking an entry, if my entry's taken out or loses, here's a loss, the market instantly goes into a market condition not worth trading, right? And notice something else that's interesting. After the loss, I didn't reconsider taking a trade here. Why? Because it proved itself right here, right? So now I know, again, based on my own data, that if I'm retaking an entry in the same range, in the same area, after a loss, I'm almost always wrong anyway. So I probably just shouldn't do that, right? And then that leads to moments where, guess what? You don't see multiple entries at an area, right? Let's look at gold. Same thing. Oh my... Beautiful.
Yeah, I'm
right?
also involved in this trade right now.
Oh, actually, so that was a bad example because I took this earlier today. I actually did take this. I took it here, it failed, and then and then I actually took it again, and now I'm taking it here again. So actually, that was a bad example because I took it multiple times. But also, I'm used to like stuff like this happening sometimes. Like this was a really nice setup, so I was like, I'm gonna get behind this. I'm okay with this. And honestly, this was a bad trade. I probably should not have taken that one. That was really dumb of myself, but you know that's okay. It happens.
Was it today? Yeah, it's what.
Yeah, this was all today. I took this today, and this today. So I took break even, loss. I probably should have broke even this one too, but it's fine. So break even, loss, and now likely a win. I mean, I'm probably gonna partial this like here or under this low. I need to actually look at 2.9, 2.3.
But with what we just talked with like the stage 1s and stage 2s and everything, the first trade that you took, which happened to be a break even, as per your rules and whatnot and your experience, it's enough sideways for you to get involved in.
I mean, so here's why, right? We're coming out of this big stage 1. And then you had like the start of a new 1, 2, 1, 2, and this is the first one. So I was like, you can easily get a 2 that then goes into deep or, you know, keeps going. So that was the idea there. And then it started going sideways for a while. So I'm like, okay, longer 1, right? And then it started building up again, 1, 2, 1. And I was like, this is perfect. So I took it off that. And again, failure. And now I'm thinking perfect long-term 1. And part of it is 1, 2. Now we're in the 1. I'll take it again. And, you know, here we are. So... You know, this trade here was based off the creation of this new structure. And then as it failed, this trade became based off of this longer 1 here.
Okay.
You see that? But I was willing to try it a few times because of where we are on the higher, right? Don't forget where we are here. Like, look at this. I want to remind you, right? Like, we are in perfection, longer stage 1 right now, right? And we're already made lower 1, 2. We just made the 1, and this is actually making that 2. So I'm entering with the basis of this, where I know this is minimum going to like 23.57 before it like starts going sideways, right? And I'm gonna try and ride this up, right? So that's where that's coming from. But that's why you can look at a trade like that and be like, you know, sometimes I don't see you ever consider this. Why are you considering it here? And it's again because there's not the perfect ICI. It's not about what ICI is best. Like it's about the context of the market, right?
Okay. Like the best ICI. When I wrote that, like it's just it doesn't exist like the best ICI, and it's just based on experience and just how you follow your rules and.
Yep, exactly.
Mm.
Yeah, I'm probably gonna manage a win on this, like a partial on it very soon. I think.
Yeah, that's fine. That's a pretty good trade, honestly.
I'm just thinking, when is the rollover on gold? Is it 5 p.m. or 6 p.m.? When is it? Do you know?
Uh,
6. Oh wait, 6 p.m. 5 p.m. It's 5 p.m. Okay, so
I
it's in
think it's
another
5 p.m.
hour.
Like yeah.
Yeah, I'm just looking at it right now because this is important. You know, actually trading, but Friday 5 p.m. 5 to 4 p.m. Okay, so the break begins at 5 p.m. It seems everything's saying 5 p.m.
I think it's like every forex pair.
See me clever reporting Monday to Thursday. I mean, I'm probably going to take a partial into this in a second because this is a lot of strength.
Yeah.
But we'll see what happens. I'll probably make an update on this right after we're done with the call.
Yep.
But yeah, like that's the reason for this entry, right? Because it's like, again, it's not the ICI or the buy stop that's a special thing, right? It's the understanding of where we are in this market, right? Like if you go through it again, we all know this. You know, screener, mentfx screener, like this thing is telling you, it's like, I want to fucking go. Not only is it telling you that, but it's been fucking going. And from there, like again, look at this, right? Stage 1 into that mini 1, 2, 1, 2, 1, 2, low term 1, big 2. Now we're in that longer term stage 1, or like, you know, something like this. And we're probably going to continue in it for a while. Like you're probably going to see this stage 1, then maybe stage 1, 2, maybe longer term stage 1, and then this, right? And that's going to line up for this kind of thing here. And hopefully we don't flush out. I get to ride this higher. You know, I don't know if it's probably going to flush me out, right? Boop, right? And then it'll go, whatever. That's fine. I don't care. But this is like telling me it wants to go long. And it's like breaking out of this MB or like this ICI, breaking out of whatever, if you want to call the pivot, whatever. Yeah, this will be part of the new course. I'll ignore that for now. But main thing is stage 1, stage 2, stage 1, stage 2. You know, resting on the MAs, rising MAs, 1 and the 2, 1 and the 2, right? I mean, and that's exactly where this trade is based off. There it is, right? That 1 and the 2, 1 and the 2. And then we start making this low key 1, 2. Right, you can literally see where my entry is. Like it's literally through this short-term 1 into the entry that presents inside of it, which was this one. Right, and then you even had this one and this one and this one, and notice something interesting that we spoke about. Once there's a win, it's a win, right? No matter which one you take, like it's likely winning, no matter what. So that's the beauty of price. Yep.
Yeah, even on, like on the 4 hour, it's a very clear like stage 1.
Yeah, exactly. Like, no matter how you look at it, right?
Yeah,
in reaccumulation, super bullish. Here's your long-term stage 1, and within it, right? 1, 2, 1, 2, 1. Again, 2. Where can it reach to? At least probably 2350, right? And that's what it's like. I can like draw this, right? I know this is gonna at least probably reach to like right there, and that's where I can take my first partial. So like, hopefully, I can live through some sideways and then boom, right? In the next hour, maybe it just boom, takes me out there or something, right? For the first partial, because it just becomes super extended. That's what I want to see, right? I'll probably just manage a full stop like over here and just let this maybe, you know, something like, I don't know, like this, right? And then boom, and I'll get my first partial somewhere up here. That's what I want to go for. That's kind of the idea. But, you know, I'll probably, what is this low at? 2.6. Yeah, like I'll probably manage a 50% right here in a second. But also like with the more and more I trade, I see so many of these little managers that go like this and then insta do this. So like I'm considering just taking a full manage somewhere here and giving this a second to maybe do that. We'll see. Because again, like the better you get, the more you start realizing that if you just have simple trailing kind of rules behind what you're doing, you can make money because you're going to hit like one of those runners that then go, and you like, you know, the management becomes super easy, right? Like GBTC was a really good example, right? Where I took this thing. Here we go. Where I took this thing, like same exact rules. Like look at this, right? Long 1, 1, 2, 1, 2, 1. Where did I enter my trade? Right? Like it's like it's almost funny, right? 2, low key 1, 2, 1, 2, longer 1, 2, 1, 2, 1, 2, and then long term 1. If you remember, I was trying to get long again. I was considering it literally right here. I had a long. Where is it? Right here, I had a long. It never got there, failed down. I exited my position, and since then, look where we are. Price is just fucking off, right? And then again, if it wants to reset up, 1, 2, 1, 2. Look what we're in. 1. This is making a 1 into 2. And again, if we go 1, I'll be looking for entries here. Why? Because it's now lining up with models, across time frames, overall bullishness, get over the MAs, and right there, right, is the opportunity to then get long again, right? And if that doesn't happen, great. It'll roll over, and whatever, I'll ignore the market or like go chop, don't give a fuck. And then similarly, this thing's telling you the same thing, right? Right now it's telling you it's overall bullish on higher, a little bit bearish on lower. So hand in hand, I'm waiting for it to set up. I'm not taking trades on it. Let this thing show you it wants to go, right? And then it'll be great trades, because during this whole time, from here to here, it was all green, right? So I'll just follow that. And this is where I got in. And during this time, this was all green. So I can just wait for that to happen. And then I can get in. But yeah. Same thing on, yeah, exactly. I mean, it's all the same thing, honestly.
Crazy.
And now this thing is just rolling higher. Let's see, where are we here? Where's my GC looking like? Yeah, this is a little bit back in time. That was my losses. Yeah, you see 2 losses. And then I took this one. This is this guy. Something like this right now. Yeah, this one's going really, really nice. Really, really nice.
Yeah, that's a very clean trade. I actually got involved into it, but I took like the ICI at 1:30 p.m.
1:30 p.m.
Yeah,
oh,
EST.
This one, yeah, that was great. Very beautiful, yeah. Starts going, doesn't really give you break even rules. So did you run this up? Did you make your money?
Yeah, I took I protect with the candle at 135, and my buy stop was at 120.
Bro, that's
120.
beautiful. Do you have an updated equity curve? Where's the new high? Do you have your new high yet, or did you take this on a different account? Ah, there it is. There it is. Yeah, exactly.
Yeah, so
yeah, this is beautiful. There you go, man. And you're riding it up as well, yeah. And then, oh, you just got full TP, yeah?
yeah, full TP, yeah.
Beautiful. There you go.
And something I think that people can have a little value from it is like with the break-even trades, and like when I said like most of my trades come back to break-even and whatnot, is it like when I was breaking even, let's say this is my original entry, right?
Mm-hmm.
And with spread, maybe your entry is like right here, right?
Yep, can happen, yep.
I was putting my break-even here.
I mean, so even here it would have worked out, but I would be very consistent and try to keep it at the same price. Yes, because that's what you've tested, right? So it's very important.
Yeah.
So like taking an extra minus 0.03 R is not going to make or break your system. But changing the rules in a small way, like you're moving your stop to a different area, is going to make or break a system, right? So it's very important that you kind of consider how you're going to do it. But also at the same time, it's okay to protect the price that you got in at, as if those are your rules. There's actually nothing wrong with that. So if you did get slipped to 23.35, it's okay to protect that slip. It's okay to protect the price as well. I don't think there's a right or wrong way to do it. It's just be aware of, there's an entry that you wanted, and that is theoretically the price point that would change your mind. So you're either someone that wants to be protected by the price analysis or by the money analysis, right? So, and it's okay to do either, but just be aware of which one you choose, I think is the best way to think about that, right?
Yeah, like I wrote in the mentorship in the trade talk, and I was like, I take a lot of break evens and whatnot, and they said like, why do you put your break even like not on the original entry? And since then it's gone really better. And also with my like the 4TP the 4R TP, I was adjusting my 4R like that, and mechanic may be like actually a 5R if you put it
Oh
on the
yeah, yeah.
original.
You have to be very careful with that too, right? So with a
Yeah,
fixed system, a lot of the fixed stuff you tested was with exactly this image right here,
yeah,
right? So you have to make sure you maintain that because again, um, the gods have shown you the number, right? And that number
yeah.
works for a reason. The number was not 4.6, the number was not 5, the number was not 6. So you cannot change that number just because the
The
profit in the
spread.
live is different, right?
Mm,
So yeah, don't do that. That's something I would say you shouldn't do. Keep that based correctly. Whether you break even to your entry price or to the analysis price, I think it's okay to do either.
yeah,
But regardless of which one you do, the profit price target should always be based on the analysis price. Okay?
yeah.
Always. Very important if you have like a fixed. But yeah, dude, this is solid. It looks really good. So I think you're good. I think you're good to continue. I think you're in a really good spot. You know, just keep yourself honest. Take those break evens because they are feeding your wins. That's literally how it works.
Yeah.
You know, get funded, send over the certificate, and yeah, bro, you're chilling. You're doing really well. So, got a ton of
Thanks.
respect for it.